Good evening to everyone. It is a beautiful day here at our headquarters in Dallas, Texas. We hope everyone is doing wonderfully. We want to welcome you again to our Q1 2018 Market Vista briefing webinar. I will introduce our panelists in a moment. I just wanted to point out that during the webinar, if you'd like to live tweet, feel free to do so at #MarketVista. Now, why don't I introduce our panelists for today? We have a wide array of members from Everest Group's senior leadership team. We are led by our Chief Executive Officer, Peter Bender-Samuel. We have Salil Dani, who is our Vice President of Global Sourcing, Michael Jansen, who is our Chief Research Guru, H. Karthik, who is a partner in our Global Sourcing practice, and Eric Simonson, our Managing Partner of Research. When you look at it, the team combined has well over 100 years of research and work in the sourcing market. So you are in good hands, seeing that my claim to fame is that I have seen every episode of Seinfeld. So we are in very good hands today. And I want to just set the stage for the focus of today's webinar. We're going to really break it into a couple of pieces. We're going to we're going to present some of the global services themes from 2017 that we saw, and even more importantly, then we're going to share some of Everest Group's predictions for the upcoming year. Hard to believe we are today, as of today, we're halfway through the first quarter of the year already. As we break it out, you'll see that on the next slide, our focus from the webinar, as I mentioned, is from our flagship research program, Market Vista, which has a quarterly update on the global services market. We're going to talk about the trends. We're going to have Q&A at the end, but during the session, as Kevin mentioned, if you have any questions, feel free to sign in on the Q&A box at below, and if we have time, we will answer those during the session. Now, the way we really want to get started is with a poll question. So everyone get ready to vote. What our question is that in comparison to 2017, currently, what is your level of confidence in hitting your 2018 annual targets? And our answer options are, we're much more confident, you're more confident, kind of neutral, we're less confident, or really depressingly, we are much less confident going into 2018. So if you could all vote right now and submit your votes, this is something that will give us an idea of the overall psyche of our attendees today, and we will be able to take that information going forward and see if it kind of jives with what we've been noticing as well. So please vote. We'll keep the polls open for another 10 seconds. And like I said, my fingers are crossed that everyone's in a good mood today and is feeling good about 2018, but we will see. And let's leave it open for 5, 4, 3, 2, and 1. Why don't we close the poll and see what the results are? And as we close that poll, right now it looks like there are no results, but obviously we're just switching over. While we are closing that poll out and getting to show the results, why don't I ask, here we go. We could see that over half of the group today is more confident going into 2017, of which 86% are either neutral or more confident, which is good. And we've got about 15% that are less confident. So why don't I ask our Peter Bender-Samuel. Peter, as CEO of Everest Group, you are talking to a lot of clients, and I know you've been traveling already at the beginning of this year. Is this the sentiment that you see, or is there something different?
No, I think this is quite consistent with what I see. First observation that the market is mixed. There are different segments and different clients heading in different directions. But overall, we do see a pickup in enthusiasm and demand, and we're, as we know going forward, we'll be forecasting for certain segments to really accelerate this year. And I suspect that that's what we're seeing here.
Excellent. Okay, great. So overall, it's fairly positive, which is good. So why don't we start off, and let me ask Salil Dani. Salil, based on our market vista research, what do you see are some noteworthy outsourcing market trends that you saw in 2017?
Sure. So if you can go to the next page, please, and talk about the outsourcing demand trends that you see on the slide. What you see on this graph is really an year-on-year comparison of new outsourcing deals that were announced in the public domain over the period of 2012 to 2017. And as you can see, in 2017, we actually saw a dip in the number of new outsourcing deals compared to 16, and also a dip compared to what you saw in the last 4 to 5 years. Now, the way to interpret this chart is really we saw a reduction in demand growth for outsourcing transactions in 2017 compared to what was going on for the last few years. And some of this decline and the reduction in growth was predominantly coming from Europe, largely UK, but also other parts of Europe, and also rest of the world, which are some of the emerging markets in Asia Pacific, somewhat different and contrary to the trends that we saw in the previous years. In terms of industry verticals, most of the industry verticals continue to maintain their share. So a lot of the demand was still driven by banking and financial services, as well as manufacturing and so on. We did see some uptick in oil and gas, but the main story in 2017 was a somewhat decline in incremental outsourcing demand. The one point to note there was in terms of average ACV, or annual contract value, we did see a slight increase, especially given some technology transformation and large deals that were signed, particularly towards the end of the year. But net-net, we did see a decrease in incremental outsourcing demand in 2017.
So, okay, so there's a lot going on here. It's kind of a mixed bag in terms of growth, I guess. You show that transactions are down, but the annual contract value seems to be increasing. Are there any other areas that you're seeing that are maybe potentially suggesting some more growth?
Sure. So as you can see on this particular page, there are some bright spots that we observed in 2017 itself. And these are predominantly the theme, around increasing maturation of the market when it comes to outsourcing spend. So let me take a moment to explain what I mean by this. The chart on the left is talking about the increasing share of digital in overall technology deals, and for the first time, we actually saw digital deals or transactions that had a digital component in them overtaking the traditional outsourcing deals in terms of the overall share for new outsourcing transactions. So that was definitely one big key message there. And in terms of the specific types of digital work that was being sourced, it was largely driven by cloud as well as mobility and analytics. However, the largest growth areas were IoT and cybersecurity. And as we look back at 2017 and also look at what's really likely to happen in 2018, we do expect this trend to somewhat continue. The other interesting thing that also happened in 2017 was somewhat revival of the activity from mid and large buyers. So those that have been following our Market Vista webinar for the last many quarters would have seen that in the last few years, the activity was largely driven by the smaller enterprises. But in 2017, as an aggregate year, we did see a revival from the larger enterprises, particularly in banking, but also in sectors like healthcare, oil and gas, as well as a bit of manufacturing in Europe.
Gotcha. Okay, so let me ask this question. I'm gonna turn to Karthik. Salil talks about potentially the recovery in the outsourcing market. As we turn to the GICs, the global in-house centers, my question, Karthik, is: do you feel that the recovery in the outsourcing market is potentially stunting the growth of the GICs?
Thanks, Alan. If you could move to the next slide. In fact, it's exactly the opposite. Enterprises are increasingly shifting towards a do-it-yourself approach. So what does that mean? Over the past few years, we've seen multiple large enterprises move work from service providers to GICs. Again, this is not across the board, in specific areas, especially in IT, where they saw benefits of increased productivity, driving greater domain knowledge by doing the work in-house. And we've seen the GIC to service provider mix in some of these large enterprises undergo significant changes. So what you see on this slide is the number of new GIC setups set up year on year, and clearly 2017 was an all-time high in terms of new GIC setups. What's more interesting than the overall setup is really what's going on beneath that. If you look at the blue chart here, the share of new GIC setups supporting digital, so digital includes the entire spectrum of social mobility, cloud, automation, analytics, Internet of Things. That's almost half of the new GIC setups supporting some form of digital services. So enterprises are being a lot more intentional about what to set up GICs for. And the focus now is not so much on the traditional IT or BPO services, but focus more on the digital services. What is also noteworthy is the fact that the small and medium enterprises account for more than half now of the new GIC setup. So there is more comfort in the small, medium-sized enterprises to think about GICs, because historically there's been a view that the GIC has to be large scale in order to be sustainable. However, if the work done is fairly niche, like in digital, it is definitely possible for GICs to still be sustainable, command a good brand in the market driven by the nature of work. So while we're seeing a recovery in the outsourcing market, it is also interesting that the GIC setups have been growing at a steady clip and an all-time high in 2017.
Huh. Okay, thanks, Karthik. So let me ask you a follow-on question. So you talked a little bit about the evolving needs, more digital, a little more do-it-yourself. One of the questions we get asked at Everest Group all the time is regarding geographies. So are these changes impacting the geographies that are used to deliver the services?
Not materially, Alan. In fact, the trends in terms of new GIC setups have been fairly consistent over the past few years. India continues to be, the largest from a GIC setup perspective. We've seen significant growth in Central Eastern Europe, especially as we think about GICs getting set up for digital services and more small-scale niche work. Significant growth in Central Eastern Europe, notably Poland, but also in places like Czech Republic, Romania. Philippines has not seen too many new GIC setups in 2017, but the existing GICs in the Philippines continue to grow and evolve. So short answer to your question, no material changes in the types of locations in which these GICs are being set up.
Sounds good. Okay, great. So now why don't we kind of talk a little bit about service providers. I'm going to ask Eric Simonson. Eric, with these changes, how do you expect to see the evolving needs that we've talked about impacting the service provider landscape?
So Alan, if we look at this from the mix of service providers, kind of the share, let me explain a little bit what's on the left-hand side of this chart. There are about 25 service providers we describe as the Market Vista Index service providers, and you'll see on the left-hand side that's in 20% of the deals, 22 to 29. They are a much larger share of the dollar, but in terms of the volume, they're in this kind of 25% range. And these are sort of we think of as the usual suspects, both the global majors like the Accentures, Atos, Capgemini, DXC, IBM, et cetera. Also the Indian heritage players, including the kind of the 5 or 6 major IT, the Cognizant, Infosys, TCS, et cetera, along with the BPO players, Genpact, EXL, WNS, those sorts. Anyway, what we see is compared to 3 years ago, where they were nearly 30% of the deal volume, that's now gone down closer to 20%. And the other service providers, of which there are many, and obviously almost all of them are much smaller than these large players, we've seen that other group actually gaining share in the incremental outsourcing deals being announced, which leads to kind of what's going on here. And we really see two dynamics. The first, which is indicated by the orange color, is that there are some traditional players, which are mainly the Tier 2 and Tier 3 IT majors, that are doing a good job of picking up volume of work with the small and mid-sized buyers. They're big enough to be very competitive for their needs. They're able to demonstrate a intimacy that's harder for the larger players to generate, and as a result, they've been able to move the needle. The second is sort of the rise of some of the specialists, many of them driven by the digital dynamics we've been discussing. The places we see this most notably from an industry perspective are the banking, financial services, insurance, along with the healthcare. And in the types of services that they're providing oriented around cloud, analytics, and Internet of Things. So again, kind of two things behind this shift in the volume of deals. The kind of smaller market picking up on the back of the smaller service providers, and then the specialists also gaining traction as this digital wave has cascaded across the market.
Sounds good. So then let me follow on and just ask you, do you feel that are all the Market Vista Index providers being impacted in the same way, or do you see any key variations?
Broadly, they've still been reasonably successful. It doesn't matter their business mix. One way we've looked at this and is indicated on slide 10 is we've broken the Indian heritage providers out and compared them to the global majors. And the specific organizations are listed in the footnote on the slide. These numbers are headcount and going all the way back to 2011 and how that has changed across these two clusters. This is inclusive of acquisition activity, which most of them have been acquisitive in this time frame. What you'll notice for the very first time, the India heritage players in 2017 in aggregate shrank in terms of headcount. They did this while growing by 8%. So this whole concept we've heard about for a decade of nonlinear growth, we're finally seeing a more specific example of that kind of showing up. So we find that to be pretty interesting. We noticed the traditional majors, which had accelerated a few years ago in headcount addition, slowed themselves, but was growing at about half the rate, 4% annual growth rate compared to what the Indian heritage are. So the models are starting to change in ways that can be sensed pretty easily. Would not be surprised to see some of this continue as automation and other things kick in into even higher gears in the coming years.
Great. Okay, so now I want to thank everyone. That kind of talks just from a high level of some of our key market developments and trends from 2017. So now we're going to go into the Everest Group vault and take out our crystal ball and talk a little bit about our predictions for 2018. So why don't we start with Michael Jansen, and I'm going to start with kind of a broad question. Michael, how do we see demand shaping up for 2018?
All right. Thank you, Alan. So I think I'd start back referencing 53% of you that were more optimistic. You heard Peter's comments as well. As we talked to service providers, we're hearing a distinctly more positive tone to both deal size and velocity. So I think that's an important conversation. And if you put the backdrop here for how business is doing, it probably doesn't get any better than this. I mean, when you think about it here, we've got low interest rates, we got rollback of regulation, we got a tax cut, we got fiscal stimulus, and we have a booming equity market. I mean, those are all fantastic things in terms of a business backdrop that, hard to be anything but optimistic. Now, having said that, we have the impact of the digital disrupting many different business segments. It's causing challenges in terms of market share for individual businesses, and it has the potential to shake up quite a few industries. So we put that in the backdrop here. It's forcing the hand of some decisions here. So the reality is that we all heard about the digital disruptors, and I'm not going to go through the list of all those in various industries. You've heard all about that. But the reality is that the rest of the businesses that have billions of dollars in existing revenues are having to make their changes while the plane is flying in the air. And so they are now coming to grips with, okay, what does their business look like? What does a digital disruption mean to the marketplace, and how are they going to react? And it's time to act.
Great. So can you talk to a little of some of these specifics?
Yeah. So essentially, we've seen a lot of experimentation over the last 2 to 3 years. And if we roll it forward there, we've seen a lot of experimentation over the last 2 to 3 years, and that experimentation is now moving into implementation. So we're seeing bigger deals, many of them including the digital components that was described there. The value propositions by the service providers are changing. They are retooling their offerings and their messaging, and as a result, they're becoming more compelling. Having said that, we're also seeing a number of different newer players come into the marketplace, and I'd pay close attention to those that are in niche areas that are leading their segments and potential to be very disruptive in their own right. So pay close attention to that as we see the demand and business pick up.
Great. Salil, I know you've done some work in this area too. Anything else to add? I'm gonna assume that means no. Okay. Why don't we go on to our next prediction, and I'm going to ask Peter Bender-Samuel to talk about that. So, Peter, the question I have is really, how do you expect to see the acceleration in demand that Michael's talking about? How's that going to impact the service provider market?
Well, I believe it's going to be mixed. First, I would underline that the deceleration we've been watching for the last 3 years in the service provider market, and the legacy part of that service provider market, is turning into, and we predict this year will turn into degrowing or shrinking. And given that that 70% of the market is, or over 70% of the market is still in legacy, that's going to create a substantial drag on overall growth. So we expect that legacy, and legacy includes the labor arbitrage factories that have been driving the majority of the growth over the last 20 years. So we believe that segment will actually accelerate in its shrinking. Offsetting that, and perhaps more than offsetting that, will be an acceleration in the digital areas or these new growth areas. And as I think Michael just alluded to, we see that being quite pronounced this year. I think I would specifically call out that what we see is that in the last 3 years, we've really been the market has aggressively been experimenting with these new digital frameworks, whether it's automation, DevOps, cloud, etc. And what we believe, or what we see now, is then moving from experimentation to full-on implementation. We've given that a term, which is IT modernization, which we believe is going to capture the majority of the dollars going forward this year, the new dollars. That's not to say that we won't have modernization happening in the BPO or BPS sectors, but we believe those are going to trail the IT modernization marketplace, which we think is going to be very attractive and grow quite fast this year.
So Peter, you got businesses flush with cash. They're going to act. I mean, I think that's what you're ultimately saying here. It's time to move.
Yeah, we have a beautiful convergence. We have the industry prepared to act, having done sufficient experimentation and built enough confidence in these new models. And we now have the funding. And I think, just pull one aspect of that, the tax cut and the repatriation of funds back to the U.S., the expectation and the political pressure is that companies use part or perhaps all of those, and certainly part of those, for investments. IT is raising its hand very, very high and saying, look, I'm prepared to modernize. I can be more efficient. I can be more agile, and I can be better aligned against business, but I'm going to require substantial capital to do that. So we see these large programs forming with substantial capital backing to drive that modernization.
So let's go to the next slide and look over the next 12 months. So, Peter, how does this play out?
Well, I first want to acknowledge a partnership that Everest has with Deep Dive. Deep Dive is an equity research firm headed by Rod Bourgeois, and several years ago, Everest and Deep Dive entered into a joint venture to address this marketplace. And some of the work we've been doing here, much of this work comes from that collaboration between our two parties in that joint venture. So as we think about some of that work, we look at the different market segments, and on this chart you can see 6 of them laid out here. If you think about the top 3, that is engineering services, products and platforms, and business process, we see those being very attractive. First, we see them benefiting greatly from this digital wave going forward, and not suffering from significant revenue compression by runoff of legacy. So we expect those 3 segments and firms centered in those to do well. The bottom 3, I think, there's a different story. Whereas they have a very optimistic outlook for those companies that are able to get in the middle of these big programs, they have to navigate both the compression of their legacy business while they capture or participate in these large, well-funded programs. In this, we expect to see overall, we expect to see separation in the provider community. Historically, the provider community has really acted in lockstep with minor differences in growth between the different segments. Here we expect to see some significant separation. For those companies that are both in the right segments and in the large programs, we expect to see double-digit growth. For those that are either in the wrong segments or have focused on the legacy and experimentation segment of the market, we expect to see much slower growth and potentially a shrinking market base.
Okay, so a lot going on there. So let me ask the obvious question then. Based on that, do you see any variations on how this is going to play out across the service providers?
Well, I think I just said that. I think we're going to see the right service providers, a segment of service providers growing much faster than others.
So if you had to put that in percentage terms, what sort of gap in percent annual growth could you imagine?
I expect to see more than 10% growth gap between the leaders and the average.
And Peter, one of the things I've noticed is a significant amount. You talked about the labor arbitrage, the traditional labor arbitrage value proposition. One thing I've noticed recently is a tremendous amount of investments by those firms. Which kind of those investments do you think will pay off?
Well, first, it's very clear that the whole industry is awake to this pivot or this rotation into digital, and is working feverishly to position themselves for that. I think for the last 3 years, that's been a story of demonstrating mastery of technology, and acquiring that technology. I think that the investments now are those that are focused to be able to position themselves to drive the large programs, as opposed to demonstrate mastery of the smaller programs. That investment is quite different from potentially owning the IP or demonstrating mastery of the IP. So it's the program management, it's the project management in a digital context, and be able to handle the change management that is required on the client side, which is very substantial as clients move into a different service model. I think one of the things that is very different about this new world is the amount of change the client has to undergo. If you think about the labor arbitrage market, or the change there was accepting the work was done from a remote location. Here, they have to fundamentally, in the new digital world, they have to fundamentally change how they think about IT, how they think about how they organize the philosophies and processes. All of that really didn't get challenged greatly in the labor arbitrage model. So that change management issue, I think, is going to be a huge issue going forward, and those companies that are able to address that and invest in that capabilities are well positioned to participate in these large programs.
Yeah, so you start talking about layering in more industry context. You start talking about that change management you mentioned, but that all has to come down and manifest itself in improving the customer experience or the employee experience or the partner experience. If it doesn't result in that, we haven't made the progress that we need to get to.
Well, first, you bring this issue of experience, and often we hear, client, customer, employee, ecosystem experience as a hallmark of a digital transformation. We believe there are two types of transformations out there. There's business model transformation, where the customer is seeking to compete or do something differently in the marketplace. That is where you see this term experience come through. We also believe there's a second segment, which is now just emerging, which is the modernization piece. We conflate the two, I think, at our peril. The modernization piece is focused on enabling that, but is not directly going after the experience. It's about efficiency, it's about agility, it's about positioning IT or business process to better serve. So its focus is on the first two, so they can do the third. When you're looking at a business model transformation, it's reversed. The focus is on the experience. They would then look to the new technologies to drive the better experience, and almost coincidentally, they get that at a much lower cost.
Yeah, I totally agree. I think it's, the service providers that can deliver that will be the winners, and those that don't will be at their peril.
So I was listening carefully. You said one word you didn't use, Peter, was consulting. You used change. Okay. I could interpret that from what you said, those who have consulting practices will be better positioned to handle what you said. Is that true? Or are there different types of consulting, or how would you assess that?
So that's a complicated question.
That's why I asked you the question.
So I think let's take the two categories. For those people or those opportunities that are focused in the business model change, the customer business model change, I think consulting is an absolute requirement to fully participate. And those with strong consulting practices, I think, likely do well. For example, Accenture is extraordinarily well positioned in that segment. That changes somewhat when you look at the modernization. In a modernization situation, we shouldn't conflate consulting practices with a new consultative approach, okay? There, we're talking about, let's take IT modernization as our example. We're talking about full-on rollout to hybrid cloud. How do we get there? Now, is that consulting? Well, increasingly, in the experimentation, they had more of a consulting component. As we get to full-out program rollout to a hybrid cloud, or a move from waterfall to agile and DevOps in applications, these different transformation journeys, what you have is delivery needing to be consultative, not necessarily consulting driving delivery. So I think I think consulting and importing is particularly important for the business model change, where the customer's trying to change it.
So in some ways, what you're saying on that second one is the skill sets are, yes, there's maybe different technical skill sets, but it's also a mindset and a different way of handling those new delivery models.
That's right, and I think that mindset issue is really key. What we're looking here on these different transformations, whether is a change in mindset, both on the service delivery part as well as the client. And that change in mindset is just hard.
Yeah, and I think one of the areas that we're spending a lot of time on, and just finishing up one of our Pinnacle studies, is on RPA, and I think that's an area that's a very fragmented implementation within the enterprises, and is definitely requiring a consultative, not necessarily consulting, but a consultative approach to how they best scale that in, given that it's not necessarily a monolithic top-down approach, but it is a very potentially a very lucrative for the service providers, but also potentially huge improvements to the employee experience and the customer experience. But it does not need a full consulting. It needs a much more consultative approach to how do I deploy that. And we've seen that in our analysis that we'll be showcasing in the next couple of weeks here.
Super. Okay, so let me also expand this, and I'll turn back to Karthik. Karthik, do you see that the GICs are going to see this similar type of acceleration in demand?
So I think, Alan, with the GICs, some GICs will see expansion in demand, but I think the more important theme for the GICs is on evolution, not necessarily expansion. And let me explain what I mean by that. So the strategically positioned GICs will definitely see better opportunities to support their enterprises or even lead the enterprises in their digital agenda. So let me first talk about what do we mean by strategically positioned GICs, right? And as we map GICs on the maturity spectrum, we believe that roughly 1/3 are strategically positioned. In other words, they're not only doing reliable service delivery, but are adding value in terms of niche skills, in terms of catalyzing the digital agenda of the enterprise, fostering innovation, so to speak. So for these 1/3, GICs, the future looks really bright in terms of them being able to step up and add more value to their partner entities. If you were to move to the next slide to talk about what that really means. First of all, while there is opportunity, GICs need to take a forceful approach. So what do we mean by a forceful approach? The historical operating model has been for the parent company to take the lead in the ideation stage of pretty much everything the GIC does. And the GIC was seen as a reliable and a good executor of services, of these ideas. In future, what we see happening, and then we see that increasingly happening in 2018 for the strategically positioned GICs, is that the lines between what you call the parent company and the GIC are getting blurred. So there is a shared responsibility for ideation, innovation, and ownership. The key to make this happen is that GICs need to be proactive about this, right? and not just wait for the parent company to set the mandate for them, but more proactively define it themselves. We also saying something here around digital pervasiveness. So what does that mean? And this goes back to one of our studies that we did on digital and how digital is impacting enterprises and where are enterprises prioritizing their investments. Digital pervasiveness essentially means driving a balanced agenda across both digital for growth and digital for efficiency, and more importantly, driving initiatives that can contribute to both. And there are multiple examples of GICs that have done that. Now, in order to do that, the key is proactiveness. And in addition, their approach needs to be holistic across different elements of their operating model. So let's talk about sort of the ones here. Expanding existing capabilities, and Alan, that was the genesis of your question. GICs need to actively think about expanding some capabilities, definitely. But equally important is they need to think about should they be degrowing some capabilities. That's why I said this is about evolution, not so much about expansion alone. Because if you were to take a hard look at this, over 60% of the work that is done by GICs is fairly transactional in nature. And I'm taking an overall point of view here. It obviously varies by GIC, but it's 60 to 65% is transactional. And in the future evolution to drive digital pervasiveness, obviously automation of these transactional processes has to be and will be a key part of their agenda. But GICs also need to think about different ways in collaborating with the ecosystem. So what does that mean? How can GICs better collaborate with service providers? So is there a case for some transactional work, in fact, to be moved out to a service provider? The GIC plays the role of a service integrator of sorts, but doesn't necessarily do the delivery themselves. They can focus more on the digital skills, the more high value added niche skills. The other aspect of the ecosystem is startups. And we've seen, and we will see more GICs, the ones that are strategically positioned, drive the parent enterprise's agenda on collaborating with startups. It can take various forms. So GICs can run startup accelerator programs on behalf of their parent company. They can help select startups for the parent enterprise. And that also ties into fostering innovation. And let's also talk about what innovation means, because it's both a frequently used and abused word in the industry. Innovation, and GICs need to think about innovation as something which can truly make a difference to the parent enterprise. And let's not forget that innovation is not limited to new technologies, new analytics. Process innovation is also innovation. And this is a common question that I get asked by many GICs that are primarily focused on process delivery. Can they innovate? Absolutely, yes. And innovation can mean something as simple as reducing the turnaround time on a particular process by 60%. That is innovation in the context of things. What do GICs need to do to drive innovation? I think there needs to be a concerted focus on this. We've seen many GICs set up dedicated innovation teams that work collaboratively with the innovation agenda of the parent enterprise. As I said, innovation can take different forms, be it on data, analytics, technology, process. It's really to figure out what truly makes sense in the GIC's context. Underlying all of this, as we all know, effectively boils down to talent. And the strategically positioned GICs will actively think about reskilling and upskilling workforce. Now, why is this important? Clearly, with automation coming in, there's going to be a lot of bandwidth that gets freed up. But the bigger pain point is that the new skill sets that are required by GICs are not readily available in the market. So the traditional model of hiring from peers, of hiring from the industry is not going to work. So in a recent survey that we had done on this upskilling, reskilling topic, it is among the top 2 priorities for GICs. At this stage, the industry has been fairly in an experimental mode when it comes to reskilling, upskilling. But going forward, there needs to be programmatic focus on reskilling, upskilling. So I talked about the GICs that are strategically positioned. The ones that are not, there is a risk that they may be caught flat-footed in this whole industry of disruption, because as disruption sweeps the parent enterprise, it's going to impact the GIC as well. The strategically positioned ones will be proactive and take a forceful approach to evolve. The others might be compelled to evolve. But it may be a sort of a harder evolution for them. That's why we believe that it's important for GICs to stay ahead of the curve and be thinking more proactively about evolution.
Great. So this kind of jives well if we go to the next slide, and I'll ask Michael Jansen, can you talk a little to our digital maturity Pinnacle model?
Yeah, so what Karthik was just talking about, we want to take a very data-centric approach to that, and we have just launched into the market a Pinnacle study around this. And let me describe what a Pinnacle study means. It's different than most analysis that goes on out there. What we're looking to do here is compare outcomes that enterprises are seeing in their digital implementations, and we're looking for the corresponding capabilities that were required to get there. So we're looking for cause and effect. What is the correlation between the actions you take and the outcomes you get? And so we recently just launched that, and I believe in the chat box here, we're going to post up a link for you to participate. It'll take you about 15 to 20 minutes, but we think the value that you can get by seeing yourselves in a head-to-head peer comparison, we won't name names, but a head-to-head peer comparisons of what you're doing versus the rest of the industry will be very valuable for the GICs themselves. So I'd encourage you to take a look at that if you're a GIC, and or if you're not, forward it to somebody else in your organization. But participation here will probably will be extremely valuable for those organizations.
Great, thank you, Michael. So let's go to our last prediction before we go into Q&A, and I'll ask Eric on this one. So Eric, as you've heard, we're suggesting a lot of change, which I think nowadays we've come to accept that change is constant. What do you feel, how is this going to apply, and what's it going to mean for the enterprise?
Yeah, so it's a good point out. Basically, the more we reflect on this, the more we see it's kind of a real pivot point in how people need to think about their service strategies, and in particular, it'll be acute in their what we talk about outsourcing. So we'll have some places where deal sizes are going to be getting bigger for transformation. We also have smaller ones. The role of technology and service delivery is changing a lot, and who should own that and how should that be contracted for. Both of those together will also end up accelerating, we think, kind of evolution in what providers make most sense to have in a portfolio. So I think for the strat sourcing and vendor management community, there's a lot that's going to be changing and needs to be proactively addressed. Further, we're going to continue to see a lot of experimentation. We haven't really spoken about AI and cognitive things in any real detail today. Analytics, there's a range of new things that will be tried. And the strat sourcing vendor management is in a great position to really follow closely what's happening in terms of adoption, what's working, what's not working, and even more importantly, why. Where do these things, where are they a good fit, where are they a poor fit, to help their enterprises avoid missteps, and therefore be faster and more agile in how they navigate through these fairly complicated set of changes.
Yeah, so I think Eric, when you talk to enterprises, it manifests itself into two ways. One is, how do you buy these things? So we got pretty used to, in many of the big outsourcing deals of the last 10 to 15 years, was how many bodies do I need and what's your rate? And I think in these deals, business cases are going to be different. Who you partner with, the value that you want, those things need to be articulated in a different way. And then the second part is who you buy from. So not only what you buy, but who you buy from. The names are going to be different. Much like we saw a big change 20 years ago and another change in 10 years ago, we're seeing another pivot point to who you buy from. They will not necessarily be the same names you bought from last time.
Great. Okay. Well, first of all, thank you all. What we'd like to do now is we have about 10 minutes, 9 or 10 minutes left, and open it up for any questions. We've already received a number of them, so I do apologize if we won't get to all of them today. If we go to the next slide, we can just highlight for the Q&A session, feel free, type a question in the panel. Make sure that it's sent to all panelists because different people will be answering. And in addition, as you can notice, that if we don't get to your question or you have other questions after this, feel free to contact us. You can see the link there, or we have a number of email addresses below that we can respond to you afterwards as well. So feel free for that. With that said, I'm gonna start off the question and answer period with kind of a hot potato. I love this question. It comes from Francisco, and I'll open it up to the panel. But we talked a lot about new and existing deals, and Francisco asks, do we think that President Trump will have any effect, positive or negative, on these new or existing deals?
Well, let me start. I think we saw the Trump effect suppressing demand by driving uncertainty earlier in 2017. I think we're well beyond that now. I think the only effect going forward, so I don't see it at all suppressing demand now. It might slightly influence and play into the digital theme anyway. Digital in general would like to have delivery closer to in the closer time zones, which means more likely to be onshore. And I think the Trump effect, or the populism, which is clearly apparent in the U.S. market and quite frankly in the European market as well, might nudge it a little bit more in that direction.
I'd say a year ago, senior executives were wanting to not get tweeted at, and that dynamic of companies being specifically caught out in a negative way seems to have kind of gone away the last couple quarters. If something high profile happens that causes people to start getting tweeted at again, then you may see some hesitation on what happens. So I agree with what Peter said, that a lot of the uncertainty is gone, and even some of the policies and things that are coming out are a little more clearly pro-business than kind of the antagonistic populism smoke that was coming out a year ago.
Yeah, and I think it goes back to business has got to do what business has got to do to make money. And what goes on in Washington can be a bit disruptive. It can change the very short-term horizons maybe, but at the end of the day, if you're getting your lunch eaten by your competitors, that's not good, and you've got to address that immediately to your shareholders and your stakeholders.
Yeah, I mean, I think simply put, we're at full employment in the U.S., and if you're looking to grow and add resources, it's going to be very hard to add them in the U.S.
So I want to thank everyone for answering that very diplomatically and unpolitically. Let's go another question that came in, and I'll ask Karthik this. This comes from Berkay. Karthik, why do you think there's stronger growth in the GICs as opposed to outsourced services? Is there higher motivation to keep in-house?
Okay, so I think this is not across the board. There's a combination of different reasons. Given that the nature of work being delivered through the global services model has got more sophisticated and complex. Technology has become more and more core to enterprises' competitive advantage, right? And so there is greater preference to use the GIC model because it helps. It's seen as critical. The perceived need for control over risk is higher. And also companies have got more comfortable and more confident seeing their peers establish the GIC model. We should be careful in interpreting, though. It doesn't mean that the growth in GICs is going to completely outweigh the growth in service providers, or the pendulum is going to swing completely. There are certain services which are much better suited to the GIC model, and we're seeing increasing growth. We talked about digital services, for example. Having said that, there are some services that are and types of value that are better delivered by service providers, and that will continue to remain the case. The other aspect is really on enterprises being more intentional about what to use GICs for, and the fact that we've seen the time to maturity shorten significantly for GICs that have gotten set up in the last 3 years as opposed to those that were set up 5 to 8 years ago.
So Karthik, let me continue on this because it's slightly different, but it's a question that we hear constantly about the transition to digital. So when you see GICs implement digital modernization projects, and this comes from Tom, this question, do you find, are they reskilling employees to bring more value to customers, or are they simply reducing headcount to drop the expense savings to the bottom line?
As of now, we have not seen GICs reduce headcount in totality. So wherever they have done significant automation, they have redeployed the vast majority of their workforce in other areas. Now, whether that's been through a conscious reskilling, upskilling program or just opportunistic placement of these employees in different other work streams is a different question. But as of now, it's been more the approach to reskill, upskill, and redeploy. There will, of course, come a point in the not so distant future where you can't do this. You can't just upskill and reskill, and there will be a net reduction in headcount. The other way GICs have kind of adjusted this is to use the potentially freed up capacity to cater for new demand, right? Or in some cases rebalance work with service providers. So there's sort of multiple things going on in parallel. At one level, there is automation going on in the GICs. The same GIC may also be rebalancing work from service providers. So there are different things going on through which GICs have found ways to redeploy. But as I said earlier, going forward, GICs need to be more intentional about upskilling and reskilling.
Great. Yeah, Karthik, let me just add on to that. We're having a labor shortage here in the U.S. So, the ability for GICs to help address that, and it may not be always a direct route, it may be indirect by helping them improve processes or even implement something like RPA, which enables more productivity in the U.S. or Europe. But we are having a skills and labor shortage here that is going to start impacting businesses' ability to grow.
Yes, and that's also the reason why we see a number of the GICs evolving for niche skills. Now, talking about automation is another angle. We've seen a number of GICs act as the global automation COE for the broader organization. So not just automate work in the GIC, but help the overall enterprise navigate through this journey of automation. And this is a classic example of GICs that are being able to orchestrate transformation. So we look forward to 2018 and beyond. We're going to see some pretty interesting things happen in the GIC landscape.
Great. Well, we are at the end of our hour. I want to thank everyone again for joining us. We hope this was worth your investment of time. We will have, as you can see also on the screen, if you have time, please feel free to check out our blogs on our perspectives on the global services. You have contact information if you have any other questions, and we look forward to seeing you on our next webinar. So thank you very much. Have a great day and evening, and looking forward to a really positive 2018. Thanks, everyone.